70 to 90% of people who invest in the stock market lose money. And they're all because, one is not investing in something that you truly understand or know. Two is not knowing when to cut a loss. When something is losing, just cut it. And three is listening to too many people, have too many people in your ear and telling you to buy this stock, to buy that stock, and not knowing why they're telling you to buy the stock.
What's up, family? Before we get into today's episode, I would love if you can take a quick second to subscribe to this channel, and thank you all for your continued support to this channel. Now, let's get into today's episode.
Hello, and welcome back to another episode of the Welcome Christ show where we inspire the masses to become financially free while building God's kingdom. I'm your host, Dami, and today we'll be talking about the reality of investing. And before we get started, for those who have yet to watch my previous video, I would suggest that you guys pause this video and watch the previous video so you can follow along on this video series. It's called How to Start Investing in the Stock Market. Today, we're going to talk about the reality of investing. And the first thing I want to talk about in terms of reality of investing is just put in perspective how many people actually lose in the stock market, actually lose money. About 70 to 90% of people who invest in the stock market lose money, depending on your sources. And there are many different reasons why people lose money, and I will share a few today. Reason number one why a lot of people lose money is a lack of knowledge. People think investing in the stock market is like gambling. They treat they turn it into a gamble where they just put their money in because they may have heard it on social media. They may have heard a friend told them, their uncle had told them, oh, this stock will make them a lot of money. They invest in it and not knowing how to read the charts, not knowing how to read the different candlestick, not knowing when to sell, is a reason why a lot of people lose money in the stock market. Which most people jump into investing without fully understanding the market and the dynamic and strategies, as well as emotional decisions. It's hard to trade, or it's hard to invest when you have too much going with you emotionally, where you're too excited, where you're going through a time where you're grieving, where you're sad about a situation, where you're depressed. Those are the worst times to think about investing because your judgment is very clouded. You would think a stock is going to go up or your stock should go up. You're hoping the stock will go. But you look at the chart, you will see that everything is pointing to the stock to go down. But for whatever reason, because of your emotional judgment, you put money into that stock, and as a result, you lose money. So a lot of people lose money due to emotional decisions. So another reason why people lose is because they don't have enough patience and timing. Their time is off. A lot of people don't have enough time or doesn't have enough patience, in other words, to let a stock grow. Let their money grow in the Pacific stock, ETF, or mutual fund to actually see results. It's very rare that you put money into a stock today and by tomorrow you're seeing great returns. It usually takes years and years for such stocks to grow. Just to give you an example, it took Amazon almost 20 years to become profitable. So just imagine all the different investors who've been invested in Amazon for years from year one, and they give up in year 5. So investing is important to look at investing as a long-term thing. It's better because it limits, the rush. It limits the anxiety that you have to win today. Once you have that long-term thinking, because compared to, you're trying to win quickly, you're trying to make money quickly, it puts a lot of all this pressure into you get into stocks that you don't need to get into. It puts you get into trades that you don't need to get into, while investing in the market. That's why it's important to look long-term. And also it just takes time for, a stock to mature, a stock for it to stop to grow to where you can be profitable. And just like I mentioned in a previous video, the key to investing is buy low and sell high. And if you guys haven't yet, if you didn't watch the previous episode, which I invest, how to start investing in the stock market, I put a link in the description, which allows you to get this free study guide right here, which shows you how you can get started in the stock market completely for free, without compromising your faith. And I'll also include this link in the link below. So yeah, so there's so many different things. And also in regards to timing, a lot of people have this thing where they're trying to time the market, where and it's hard to time the market, because there's so much going on in an individual life. And as a result, you know, because they're trying to time the market, based on whatever, based on what people's talking about it on the news, or what people are, their friends are talking about it, and that's when they want to get in. And I want to say that, when you hear something, when you start to hear about stock, um, movement or stop making a move. Usually, by the time you hear it on TV, usually by the time your friend tells you about it, that move's already happened in the market. So it's very important to be very mindful of who you listen to and how you take the information they give you.
Hey family, I hope you're enjoying this episode so far. And if you are and you have yet to subscribe to us here on YouTube, please hit the subscribe button. And also, if you're listening to us on Apple Podcast and you have yet to leave us a 5-star review, please do so. Now back to the episode.
So there's different ways to make money in the stock market, and I will discuss a few of these ways today. So one of the most common ways to make money in the stock market is by buying the stock and holding it, and doing proper research and proper analysis of the chart and does that. So as the stock value goes up, you make money. Another way you can make money in the stock is by collecting dividends. By certain stocks give you back dividends, and dividends are a share of companies giving back a percentage of the profit that they made. For some companies, it could be like 20 cents per share, for a stock that you own. For some companies, it could be $1, depending on the stock. And this is just another way you can make money in the stock market, as well as trading stock. Trading stock, which includes buying call and selling puts. It's basically trading option. That's another way you can make money in the stock market. Invest in the stock market is through mutual funds and ETF, which limits your risk, compared to an individual stock, which I mentioned before. And the same rules that go by. You buy low, you sell high. In this case, you buy mutual fund and ETF at a very low price, and do your research and your due diligence, through time as well. Given the time, you will gain profit. Yes, the ETF and a mutual fund will increase in price. So those are the few ways that you can make money in the stock market. Again, there's one by buying an individual stock. You buy it low, and you doing your due diligence. The stock, of course, will go up over time. That's one. Two is receiving dividends from a stock, is where a company shares profit, that they have made, whether it's quarterly, whether it's monthly, or even yearly. And also, trading options, where you're buying or selling puts or call options, in the stock market. So those are a few ways that you can make money in the stock market. Now I want to quickly go into some of the few lessons I have learned personally, through my investing journey. So my investing journey, I've been going to almost 4 years now, and there's a lot of different things there's a lot of different lessons I have personally learned. One is only invest into stocks, ETF, mutual funds, jump into trades of any company or anything, of something that you are very well familiar of, something that you can easily track and you can keep up to date activities. The worst thing you can do while investing, specifically, buying individual stock or buying a random option call, is buying it in a company, an ETF that you don't know anything about. You don't know how it moves. You don't know what causes it to move. You don't know what news will cause investors to pull out of that trade, which of course will allow you to lose money. So it's important that you only invest money and things that you can actively keep up to date with. So, for example, if you have a bunch of Apple products, investing in Apple would not be a bad idea. But let's just say, you heard of a friend tell you to invest in an AI company because AI is now becoming a popular thing. And you go and invest in this AI company, and you not knowing anything about the AI company, you're not knowing what kind of product are they trying to create, who is their audience, what does their financial look like, and you go and invest in it. Basically you're playing a gamble. There's 50% chance that you invest in that stock can make you some money. And there's also the other chance that you might also lose money. So it's very important that you take your time, take your due diligence to actually do the research, actually for you to understand, because this is your own money. This is, what you do with your money is going to affect you and your family. So it's important for us to take time, do your due diligence, to research these ETFs, these mutual funds, these stocks before putting our money into it. Number two, second thing that I have learned is be quick to sell losing positions. Whether that's trading options, whether it's, you're investing in the stock and it's not trading the way you have planned or you have charted, be quick to let it lose. Don't get caught up to it emotionally. People often say top wealthy traders and investors often say the stock market is not your friend, and it's true. The stock market is not your friend. So you can't have any emotional attachment. You can't have any attachment to the stock. Once the stock you start seeing it going downward, it's not longer favoring you for you to make money on a stock. It's better off for you to cut your loss while you can, to limit your loss as well, than to instead of losing 10%, lose 100%, which I have fallen trapped to because I'm thinking like it's gonna continue to go back up. That wishful thinking. When you're trading stock, when you're trading options, it's important to really look at the data in front of you. What is the chart telling you? What is the financial telling you? Is it telling you that this stock is going to continue going up, or is it telling you that this stock is going to go down? Is it telling you that people are no longer using their product anymore? And if so, it's okay. We all make mistakes as humans, and this is where we have to just cut our losses. We can't have wishful thinking that, oh, it's going to get better for a vague reason. No matter what you're trading, always have a reason why you're going to stay in that trade longer. And if your reason to stay in the trade, to stay in the stock longer, is not valid, there's no possible way for that stock to bounce back. Please save yourself the headache, save yourself the stress, and just cut your loss. And lastly, the last thing I want to talk about, which I kind of talked about earlier, is be mindful of who you listen to. There's a lot of different people talking about stocks, talking about investing across social media, across YouTube, Twitter, at work, you may run into so many different people and you're going to hear different things. There's always going to be conversation, especially in this investing world. That's one thing there's always going to be something new. Someone's going to be some new hot stock, but you must have a plan. You must stick to your plan. You must understand why you're investing. You must understand the purpose of investing. What's the goal you're trying to reach, and not get distracted by everything you hear. Yes, you may take this different information from these gurus and these traders and these investors, learn from them, but don't let their word, become your Bible. Do the research yourself. Actually verify what they say. Somebody's supposed to give me a stock and tell me, oh, the stock in like 6 or 7 months or 6 to 9 months, it's going to make a lot of money. The first time I'm going to do it, I'm going to look at the charts. I'm going to see what direction the chart is going before I even invest. Secondly, I'm going to look at the CEO, look at the C-suite, who is the CEO, who is the chief executive, who are people in charge. And, I'm also going to look at, are there any institutional holders? Is Vanguard holding a position? Is BlackRock holding a position in this stock? Because, when you found the money, like these big institutions, it's very hard to lose money, especially if they're backing it, because they themselves would not want to lose money in this stock. So it's important to not take everything people give you face value and actually do your own research. Because I personally have lost a lot of money by just following people's advice blindly, and as a result of me not do my own trade, not understand it. It's not something I can keep active track of, news, stay up to date with the stock. I have actually lost a lot of money. And I don't want this, I want you guys to learn from this. I want you guys to understand that investing has ups and downs, but if you are able to find a plan, find a plan that you find a reason why when you want to invest. Understand the reason why you invest. Do your research. You can, like I mentioned before, you can click the link down below to download the free study guide, which will show you how you can get started in the stock market. Look through this information. Continue to follow us here and subscribe to us here on Wealth and Price. Read different books that will educate you, but just make sure you're making a decision. Don't make it because Donnie says to do this or person A told you to make a trade into or invest into stock because you see a reason why. You understand there's a reason why you want to invest. There's a possibility that you can make money. The great possibility, not just a possibility, it's a great possibility that you can make money. You have done, look at the chart, you look at the financial, everything makes sense. You understand their product, you understand the marketing, you understand why you believe that this stock is going to go up in terms of value over time, and you're not having any wishful thinking. And when you have all of that together, there's no reason, why you can lose money in the stock market. Like I mentioned to start off, 70 to 90% of people who invest in the stock market lose money. And they're all because of these different lessons which I spoke about. One is not investing in something that you truly understand or know. Two is not knowing when to cut a loss. When something's just losing, just cut it. And three is listening to too many people, have too many people in your ear and telling you to buy this stock, to buy that stock, and not knowing why they're telling you to buy the stock. A lot of people at times will tell you to buy stock because on the opposite end, they may have a put on it. They want you to help raise the price up of a stock up, and they bind a put. As soon as they sell their share, the stock is going to go down. They're making money on the downside, but you don't even know anything about that. So it's very important to be mindful of who you listen to. I hope this blessed you as always. I hope this blessed you guys. Stay tuned for the next week's episode and see you guys very soon. Stay blessed, guys.